Welcome to our video on understanding Ethereum volatility, risks and rewards. Ethereum has been making headlines lately, with its value skyrocketing to an all-time high in 2021. But with great rewards come great risks, and understanding the volatile nature of Ethereum is crucial for investors and traders alike. In this video, we'll be discussing what causes Ethereum volatility, the risks and rewards of investing in Ethereum, and how you can mitigate those risks. So, what causes Ethereum volatility? Well, like any other asset, Ethereum's price is influenced by supply and demand. The more people want to buy Ethereum, the higher its price will go. Conversely, if there are more people selling than buying, the price will drop. However, there are a few factors unique to Ethereum that can make its price particularly volatile. Firstly, Ethereum is still a relatively new technology, and its use cases are constantly evolving. This means that the demand for Ethereum can be unpredictable, as it's not always clear how it will be used in the future. Additionally, Ethereum is often used to trade other cryptocurrencies, which can lead to fluctuations in its price as the wider crypto market shifts. Another factor that can contribute to Ethereum's volatility is news events. Positive news, such as a company announcing that they will be using Ethereum for their blockchain projects, can cause a surge in demand and price. Conversely, negative news, such as a government crackdown on cryptocurrencies, can cause a drop in price. So, what are the risks and rewards of investing in Ethereum? Well, the rewards are clear. If you bought Ethereum at the right time, you could have made a significant profit. And with the rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, there are plenty of exciting use cases for Ethereum that could potentially drive up its value even further. However, there are also significant risks to consider. As we've discussed, Ethereum's volatility can make it a risky investment. Additionally, as with any cryptocurrency, Ethereum is not regulated by governments or financial institutions, which means that there is no safety net if something goes wrong. There have been cases of exchanges being hacked or going bankrupt, leaving investors with nothing. So, how can you mitigate these risks? Firstly, it's important to do your research and stay up to date on news and events that could impact Ethereum's price. Additionally, consider diversifying your portfolio to spread your risk across different assets. Finally, only invest what you can afford to lose. Cryptocurrency investments should never be your entire life savings. In conclusion, Ethereum's volatility can make it a risky investment, but with great risk comes great reward. Understanding the factors that contribute to Ethereum's price fluctuations is crucial for investors and traders alike. By staying informed, diversifying your portfolio, and only investing what you can afford to lose, you can mitigate the risks and potentially reap the rewards of investing in Ethereum. Thank you for watching, and we'll see you in the next video.